If you're looking at the national headlines, you might think that the housing market is teetering on the edge. You hear about price drops in Austin, inventory piling up in Florida, and you might wonder, is that coming to Charleston? But here's the truth. Charleston operates on its own rhythm. If you try to time our market using national data, you are going to lose money. So, is 2026 the year prices finally drop, or are we staring down the barrel of another price hike? Today, I'm not just going to give you a forecast. I'm going to break down exactly where the deals are hiding in 2026, where the appreciation is almost guaranteed, and most importantly, I'm going to talk strategy. Whether you're a first-time buyer, a seller looking to downsize, or a cash investor, I'm going to show you how to play your hand in this specific market to win. So let's get into it. Hey everyone, I'm Brett Lee, your realtor with the Shawn Cleary team at Keller Williams. For those of you who don't know me, I'm a Charleston native. I didn't just move here for the boom. I grew up here. After 22 years as an Army officer, I chose to plant my roots right back in the Lowcountry. My job isn't just to sell you a house today. It's to make sure you have the right intel to make a move that builds your wealth for tomorrow. To understand where we're going in 2026, we have to first look at the numbers closing out 2025. And honestly, it's been a year of contradictions. Inventory is up significantly. We're sitting at just under 5,100 active homes, which is nearly a 12% increase from last year. That sounds scary on paper, right? But paradoxically, pending sales are also up nearly 7%. That means despite interest rates hovering near 6%, buyers are still here and they are still buying. But if you want to be smart about this, you can't look at Charleston as a single entity. You have to understand it as a tale of two markets. First, you have the northern market, Summerville, Moncks Corner, Goose Creek. This is where the land is, and this is where the inventory is. Then you have the southern market, Mount Pleasant, James Island, and the Peninsula. This is where the land ain't, and what's available comes at a premium. Understanding the difference between these two is the key to finding what you want in 2026. Now, before we talk locations, let's address the money. People ask me, Brett, when are rates going to get back to 3%? And I'm going to be honest with you, they may have gone the way of gas under $2 a gallon, at least for the foreseeable future. Experts are projecting rates to hover between 5.75% and 6.25% through most of 2026. But there is a silver lining. Jerome Powell, the chairman of the Federal Reserve, his term ends in May of 2026. So there is a very real chance we'll see rates dip in the spring of 26 as Wall Street prices in new leadership and anticipated shift in monetary policy. So here's the strategy. If you buy now, you're marrying the price, which is likely to go up next year, but you're only dating the rate. When that dip happens, you refinance, but you've already secured the asset. Okay, so now where do you put your money? If you're looking for a deal, meaning you want incentives, you want closing costs paid, you want that instant equity, you need to look north. I'm talking Summerville, Moncks Corner, and Goose Creek. Here's why. Builders act differently than homeowners. A homeowner can sit on their 3% mortgage and refuse to sell if they don't get their price. A new construction home builder cannot do that. They have loans to pay and shareholders to please. They must move inventory. Right now, in the northern market, builders are offering rate buydowns, getting you into that 4% range in the first year, paying all your closing costs and throwing in design upgrades. That is manufactured affordability, and you generally won't find that in areas closer to the coast like Mount Pleasant. Now, what if your goal is pure appreciation? What if you want an asset that is bulletproof against market shifts? You need to look where they aren't making any more land, the southern market, Mount Pleasant, James Island, and the Peninsula. This is simple supply and demand. There are no massive tracts of land left to develop in Mount Pleasant. The supply is capped. So, while you won't get a deal or massive incentives here, you are buying into scarcity. When rates eventually do drop, these are the areas that you will see a price surge the fastest because there is no new inventory to absorb the demand. This brings us to the most important part of the video. How do you play your hand? Depending on who you are, your strategy for 2026 needs to be different. Let's start with our first category, the first-time home buyer. Your strength is your flexibility, so your strategy needs to be to exploit the inventory surplus in the northern market. Don't fall in love with one house, fall in love with the deal, because inventory is up 36%. You have leverage for the first time in years. You can ask for repairs, you can ask for closing costs. For new construction, use the builder's incentives to get your monthly payment down and get your foot on the property ladder now. Now let's talk our second category, the move-up buyer. Selling, then buying. Your strength is your equity. Your strategy, well, that's a tricky spot. You will likely have a low rate on your current home, but you need more space for your growing family. But the math has to make sense. Focus on recasting. If you have significant equity, you can move that large down payment to a new home to lower the principal, minimizing the sting of the higher rate. Also look for contingent offers. To be clear, these are deals contingent on the buyer selling their home in order to complete the deal. In 2021, sellers laughed at contingent offers. In 2026, with homes sitting on the market longer, sellers are willing to work with you. The reality is they're not going to be able to turn away qualified buyers for the foreseeable future. Now our next category, the cash buyer or retiree. Your strength is speed and certainty. Your strategy is you're the king of this market. Sellers are terrified of deals falling through because of financing. If you can offer a quick close with cash, you can negotiate a lower price, even in the tighter southern markets. You're solving the seller's biggest problem, uncertainty. And finally, let's switch over to the other side of the negotiating table and look at sellers. If you are looking to sell in 2026, I need you to listen closely. The post and get paid days are over. You cannot just stick a sign in the yard, demand a crazy number, and expect multiple offers. I'm looking at the third quarter 2025 market report for our area, and the numbers are black and white. If you try to test the market with a high price, you will lose money. Here's the hard truth. 63% of listings in quarter 3 were initially overpriced. That means nearly 2/3 of sellers got it wrong right out of the gate, and the market punished them for it. First, you pay with your time. According to the data, homes that required a price reduction sat on the market for a median of 76 days. Compare that to homes that were priced correctly from day one. They sold in a median of just 7 days. That is the difference between moving next week and moving in 3 months. Second, you pay with your equity. The report tracks something called the negotiation penalty. It shows that sellers who had to cut their price didn't just sell for less, they lost their negotiating leverage, ultimately selling for a lower percentage of even their reduced price. In fact, correctly priced homes sold for a median of 100% of their list price, while overpriced homes dropped significantly below that. And that's if you sell at all. The data shows that 27.2% of listings failed to sell at all. They expired or were withdrawn. So here's your strategy for 2026. We do not test the market. We aim to be in the top 37% of homes that are priced accurately. Because in this market, accuracy doesn't just mean a faster sale, it means more money in your pocket. So let's bring it all together. Here's the bottom line for 2026. The crash isn't coming, but the easy button is gone. What we are entering is actually called a normal market. And in a normal market, the winner is the person who has the best strategy. You need to know if your strategy is to hunt for a deal in the north or hunt for scarcity in the south. Where's your strategy to use your leverage as a buyer to get concessions? And if you're selling, you need to know how to avoid the negotiation penalty. If you're thinking about making a move next year, my team and I would be honored to be your guide. Hit that subscribe button and check the description below for my direct contact info. Shoot me a text or give me a call. I'm Brett Lee. Let's find your next home together.